All right, everyone, gather round, because what we're seeing in the silver market right now is nothing short of historic. For years, we've talked about the paper game, this intricate system where the price of physical silver is dictated by derivative contracts, often with little to no actual metal backing them up. Well, folks, the signs are all here. That game is rapidly coming to an end. And when it does, the price implications could be staggering. Let's start with the big one, JP For the better part of a decade, JPM was known as the king of the paper silver market, holding massive short positions that many believed were suppressing the price. But something has shifted dramatically. If you look at the recent data, their short positions have been steadily unwinding. They are getting out of the paper game. Now, why would the biggest player on the board suddenly decide to fold their hand? It's because they see what's coming. They understand that the foundation of this paper market is cracking, and they don't want to be caught on the wrong side when the whole thing comes crashing down. They are repositioning, moving away from paper and, you guessed it, likely securing as much physical silver as they can get their hands on. This isn't just a small tactical adjustment, it's a seismic shift in strategy from the most powerful player in the game. When the whale that has been sitting on the price for years decides to get out of the way, what do you think happens next? Now let's turn our attention to the east, specifically to Shanghai. What's happening there is the other side of this incredible story. We're seeing an unprecedented physical demand surge. The Shanghai Futures Exchange, or SHFE, is a key indicator of real-world physical demand, and the data coming out of there is mind-blowing. Recently, we saw the premium for physical silver in Shanghai skyrocket, at one point hitting an insane 22% over the London and New York spot prices. Let that sink in. Buyers in one of the world's largest physical markets were willing to pay a 22% premium just to get their hands on actual physical silver. This isn't speculation, this is desperation. It tells you that the supply of available metal is getting dangerously tight. When a major hub like Shanghai is willing to pay that much more, it's a screaming signal that the global physical market is in a deficit. There simply is not enough silver to go around to meet the demand at these artificially low paper prices. So what does this all mean? You have the biggest paper player, JP quietly exiting their short positions, and at the same time, you have one of the world's most important physical markets, Shanghai, showing a massive premium, signaling a severe supply squeeze. These two events are not a coincidence. They are two sides of the same coin, and that coin is the end of the paper-silver charade. The paper price, the one you see on your screen every day, is becoming increasingly irrelevant. The true price is being discovered in the physical market, where real buyers are fighting over a limited supply. Think about it like a game of musical chairs. For years, there have been 100 paper claims for every one physical chair. As long as nobody tried to sit down, the game could continue. But now, people are starting to rush for the chairs. Industrial users, investors, and even central banks are realizing that the promise of silver is not the same as owning silver. The Shanghai premium is the sound of the music stopping. And JP exit, they were the ones who saw the music was about to stop and made a run for the exit before the stampede begins. This isn't just about a short-term price spike. This is a fundamental repricing event in the making. The disconnect between the paper price and the physical reality can only stretch so far before it snaps. And when it snaps, the resulting price action will likely be violent and upward. The 22% premium in Shanghai isn't the end game. It's the warning shot. It's the market telling us that the emperor has no clothes, that the paper price is a fantasy. So, why is this happening now? A big part of it is industrial demand. Silver is absolutely critical for the green energy transition. It's in every solar panel, every electric vehicle. As the world pushes towards decarbonization, the demand for silver is not just growing, it's exploding. We're talking about structural, non-negotiable demand that is consuming silver at a record pace. This isn't a demand you can just turn off. These industries need physical silver, and they are willing to pay whatever it takes to get it, which contributes to the premiums we're seeing in places like Shanghai. At the same time, you have the investment demand. More and more people are waking up to the realities of inflation and currency debasement. They are looking for real assets, for stores of value that can't be printed into oblivion. And silver, with its dual role as both an industrial metal and a monetary asset, is in a unique position. For years, it's been called poor man's gold, but that's about to change. As the paper system breaks, silver's true value will be unleashed. The COMEX and the LBMA, the epicenters of the Western paper market, are in a precarious position. Their registered silver inventories, and the amount of silver supposedly available for delivery, have been plummeting. This is the physical backing for the entire paper pyramid. As those inventories drain, the ability to maintain the illusion of supply dwindles. The Shanghai shock is a direct challenge to their pricing power. It proves that if you can't get the metal in London or New York at the official price, the market will simply go elsewhere and create its own price. This is the great unwinding. JPM's exit is the strategic retreat. The Shanghai Premium is the physical market screaming for attention. The two events are intertwined, signaling the end of an era. The era of paper price suppression is over. We are now entering an era of physical price discovery. What this means for you as an investor or someone just watching the markets is that you need to pay attention to the physical signals, not the paper noise. The real story isn't the day-to-day fluctuations on your screen, it's the battle for the physical metal happening behind the scenes. The next few months and years are going to be absolutely fascinating. The 22% premium might seem shocking now, but we may look back on it as just the first crack in the dam. As more and more paper claims are forced to convert into a dwindling supply of physical silver, the pressure will only intensify. The paper game is ending, and a new game, based on physical reality, is just beginning. Don't get caught holding a paper promise when everyone else is demanding the real thing. The signs are clearer than they have ever been. Thanks so much for watching today. This is a topic we'll be following very closely, so make sure you're subscribed with notifications on so you don't miss our next update. Drop a comment below and let me know what you think about this massive shift in the silver market. Until next time, stay informed and stay prepared.